you want to buy a sofa, maybe you want to buy a fridge, maybe you want to buy groceries. Which type of credit should you use? So should you use your credit card or should you get a personal loan? So this is what I want to discuss in this video today. So if you compare these together, we can see that the total payments for a credit card will be 2,000 Rand more, and total interest will also be 2,000 Rand more, and it will take you a longer time to pay off that loan. Hi guys, my name is Nosi and thank you very much for watching this video if this is your first time. If you're watching my video for the second or third time, thank you for coming back, and please do remember to like and subscribe. So both credit cards and personal loans are a great way for meeting your financial needs, a great source of finance. But there are differences between the two that I think we should think about, also depending on the kind of item that you want to purchase. Credit cards are a great source of finance because with the credit card, when you apply for a credit card, you get access to the money instantly. So you'll have access to that money instantly and you can use it to pay or buy certain things. The nice part about it is that a credit card, having a credit card, is that it's a revolving debt, it's a revolving loan. So if you use it and then you pay it back, then you have access to that money going forward. The only disadvantage is that if you don't make the payments when they are due, then you will be charged interest on the amount that you've paid, and so you can incur interest. But basically with any kind of a loan, interest is sort of part of the game. But a credit card is nice is that you have it instantly and it's a revolving source of debt. The interest rate and the credit limit on your credit card depends on your credit score. So they will assess your credit score, they'll assess how you have been paying in the past, and based on that, then they'll set a certain limit, maybe 20,000 Rand. And also the interest rate that they'll charge you is also very much linked to your credit score. The benefits of a credit card is that you have instant access to that money when it is granted, and it's also a revolving debt. There's also a nice interest-free period window. So if you make payments when they are due, before they are due, say for example, you buy something now and you pay for it in full before it's due, then there's that interest-free window that you can access to. So essentially you can buy something and not have to pay interest, provided that you pay for it at the time that they say you must pay for it. I did do a video on interest-free period if you want to learn more about that, and I'll link that in the description of this video. Also, the benefit of a credit card is that it allows you to shop conveniently, it is safe to use, and also helps you to build your credit score, and comes with additional benefits like traveling benefits, lifestyle benefits, and insurance benefits. So it's a great source of income, and it is something that many banks provide, and it's also a very good type of financing. Credit cards are nice to use for necessary items. So for example, if you want to buy groceries and you don't have the money for the groceries now, you can use your credit card to buy groceries and then pay it off when you get paid and before it is due, and then avoid paying interest. So it's very nice to sort of have money there available should you need it. So if you want to buy groceries or buy small items, it's a good idea to use your credit card and then pay it off when it's due, so that you don't pay a lot of interest on a large outstanding amount. Something else to also think about with credit card is that it can be a bit risky and a bit like a trap. So the temptation to spend and spend and spend, and then find yourself not being able to pay the minimum payments due, or not being able to pay the total due when it is due, can result in high interests being incurred, and those interests then compound month on month and month, and you can find yourself owing the bank a lot of money. So when it comes to using a credit card, I think it's best to use it for small items like groceries or buying shoes for your kids, or some emergency thing that you don't have cash for now, but then you just use your credit card and make sure you pay it off when it's due, because you don't want to pay for high value items using your credit card, not being able to pay it back, incurring high interest, and then finding yourself in a big debt hole that's difficult to get out of. So credit card usually require you to pay the minimum due. But what you can do is that you can pay a little bit extra than the minimum payment due so that you can pay off your debt sooner and possibly save on interest that they would have charged you. So it's also a nice way to sort of manage your finances. It's also revolving debt. You have, so say for example, you have like 2,000 Rand in your credit card, and then you use the 2,000 and then you pay it before it's due, so then you don't pay any interest on that 2,000 Rand. Then you have that 2,000 also available to use in the future. So that's the nice part about having it as a revolving debt and something that's there for you to use in the future should you need to.
Use a credit card with a principal amount of 20,000 Rand, interest rate of 18.85%, with the minimum payment percentage of 5%. And I'm using the minimum payment percentage of that, not a fixed payment. It will cost you 28,000 Rand to pay off the loan, and the total interest will be 8,000 Rand. And then the loan term will be 155 months, which is 13 years to pay it off.
Personal loans is when you go to the bank and apply for a loan. So for example, you want a loan for 50,000 Rand. So you go to the bank and apply for a fixed amount of money, and what they'll do is they'll either accept your application or reject it. But when they accept your application, then you have to repay it off over a certain amount of time. And the nice part about it is that it is a fixed payment that you'll pay on that loan up until you pay off the 50,000 Rand that you would have gone to the bank to get. It's also easy to apply for a personal loan these days. You can apply for it online and those type of things. So they make it sort of convenient for you to apply for a personal loan should you need that loan. Personal loans are used for larger purchases. So they're used for things like a car deposit. They're used to maybe buy a laptop. They're used for something that's a little bit larger. Whereas a credit card, on the other hand, is used for smaller items, for paying for things like groceries, buying school shoes, those type of things. So they're used for sort of like smaller purchases so that it's also easier to manage your interest and your repayments. Whereas a personal loan, it's advisable to use it for larger purchases. The interest rate on a personal loan is also personalized. So it also depends on your credit score. It also depends on your history. So they'll look at your credit score, they'll look at how you are as an individual, and then they'll charge you your personalized interest rate. So everything is sort of determined and based on how good your credit score is. So it's also a very good idea for us to always keep our credit scores clean, to improve them if we can. And I did a video on credit score and how to improve your credit score. I'll link that in the description below as well. The benefits of getting a personal loan is that it is for larger purchases, right? And also the other benefit is that it is a certain amount every month. So they'll say, okay, we're going to give you a loan for 2 years or 3 years, and this is how much you have to pay for the next 3 years. And once you've paid that loan, then you're done with that personal loan. If you want another loan, you'll have to go back and reapply for a new one. But it also makes it easy for you to manage to say, okay, if I'm going to pay 3,000 or 4,000 for this amount that I got, then I'm able to put that into my budget. I'm able to plan for the future. It's a set amount, and I know I have to pay this up until I finish off that debt. So it makes it easy to manage your finances because it's fixed.
In this example, with the principal amount of 20,000 Rand and loan term of 36 months, and with the interest rate of 18.85%, the monthly repayments are going to be 731 Rand. So we can see here that the total repayments are going to be 26K with total interest of 6,000 Rand. And it will take you 36 months, which is 3 years to pay it off.
Some banks offer for you to pay back in rewards. So you can use your rewards to pay back your loan or your credit card. And I think it's a good idea to take advantage of this if you can. I'm all about saving if you can and making your money go further. So if there are rewards and there are benefits that your credit card or the loan provider provides for you, it's a good idea for us to use that so that we decrease how much we owe, we pay back how much we owe, and we get to a place where we don't owe many people. Because the thing about owing banks is that it just puts you under pressure, should life circumstances happen, should you've got forbid, be retrenched or something like that, you always know that you've got this loan looming at the back of your mind. So the quicker we pay back our debts, and the quicker we reduce how much we owe, the less interest we're likely to pay, and the sooner we are at getting to a place where, one, it improves our credit score, and two, we don't owe so many people different things, putting ourselves under a lot of financial stress and burden. So which of the two is better to use? So credit cards are better for smaller purchases, and personal loans are better for bigger purchases, one-time purchases. For example, deposits for a house, deposit for a car. That's much better to get a personal loan and not to use your credit card. The reason I say that is because, say for example, you do have facility on your credit card for 50,000 Rand, right? And then you use the 50,000 Rand facility to pay for this big purchase. What will happen is that you will have to pay your minimum payments when they are due all the time. And that could be for a very long period. So you actually find yourself having to pay small bits and pieces every single month for the next, I don't know how many years, to pay off that loan. And then every time you don't pay for something, then interest is accrued on that outstanding balance. So it's sort of like compounding interest upon a compounding interest on the outstanding balance, and sort of kind of making it difficult for you to manage and also to clear that credit card debt. But if, for example, you need the 50,000 Rand loan for a deposit, I would suggest that go to the bank, get the 50,000 Rand loan, and then you're paying a certain amount, a set amount for 2-3 years, and then you pay that off in totality. So taking the time to determine which option, credit card or getting a personal loan, is best for you will help you to manage your finances in the long term, and getting control of your financial situation. I think when it comes to finances, it's not something that we should be scared of, or something scared to speak about, because this affects every one of us and our day-to-day lives. So the more we understand what these different types of loan agreements are, the better it is for us, and the better informed we are when it comes to making decisions. This can also help us possibly saving money for the future, and also achieving our dreams for the future. Thank you so much, guys, for watching this video, and I will see you on the next one.